Singapore managed to attract $17.2 billion in fixed asset investments last year, despite the economy being severely disrupted by the pandemic. Now, that's the highest figure since 2008 and exceeds the Singapore Economic Development Board's annual investment target of between $8 and $10 billion. When the projects from these investments are fully implemented, they will create 19,352 new jobs over the next 5 years, with the majority in production roles. In comparison, 2019's investments were expected to add almost 33,000 jobs. Now, in 2020, the United States overtook Europe as Singapore's largest investor region, with just over half all fixed asset commitments. FAI refers to a company's incremental capital investment in facilities, equipment and machinery. Joining me now to discuss this further is the Executive Vice President at Singapore Economic Development Board, Mr. Tan Kong Hwee. Hi, Kong Hwee, thank you for joining us. Kong Hwee, this pandemic has left global business rather volatile and uncertain. Nonetheless, EDB's investment commitments in 2020 met its medium-term goals, with FAI even exceeding the target. What were the driving forces behind these results?
Thank you for having me first and foremost. And 2020 was indeed a challenging year for us. So we're very happy that we were able to meet, and in fact, in some cases, for FAI, we managed to exceed that target. Three factors maybe I will raise. The first is that global companies today are still looking for growth, and Asia provides that opportunity as well as prospect for these global companies. So they pick Singapore as a location to capture the growth from the region around us. The second is that our fundamentals in Singapore remain very strong, right? Whether it is connectivity, and connectivity could be trade links, they could be our transport links with the region, and that remains quite strong. We have talented people, and companies generally are able to find good people in Singapore for their operations. So with these fundamentals, companies feel quite reassured when they put their investments in Singapore that they are able to ramp up their operations well. So an example would be for BASF. This is a company that decided to put its regional production hub in Singapore, targeting the agricultural markets around us. When it comes to agriculture, Singapore is not really top of mind for many companies. Yet they decided that, because of the growth markets around us, and because of the capabilities that they can find in Singapore, they decided to make their investments in Singapore to produce crop protection products here. The third factor that I would like to highlight is, in fact, our long-standing relationship with many of our companies. This is relationship that we have built over the years between Singapore, between EDB and these companies. They have come to know us quite well, and we have paid very close attention to the difficulties that they have, for example, during COVID. And we've paid attention to where they're going as a business. And I think that has seen us been in a good position to work with them for their future.
Right. Now, Kong Hwee, the review reported that more than 19,000 jobs are set to be created in the next few years, now mostly for production roles. Why is this so?
First and foremost, I think this is a testament to the fact that we're still quite attractive as a location for companies to do manufacturing. And I want to point out that, while we say that these are all roles in manufacturing and production, there are really a range of job opportunities there for Singaporeans. In the factory, we have, for example, operators, and there will certainly be people who are responsible for processes. And then there will also be engineers who are responsible for quality, for materials, for innovation. And in fact, as we push into Industry 4.0, we need more engineers who understand Industry 4.0. Then on the other end, to support the factory, you will need commercial people who are able to sell the products. You will need HR and finance executives. So while we say production, really it is a range of job opportunities that are out there for skilled Singaporeans. The second point that maybe I want to highlight to this question is, we should not be looking at the breakdown of these jobs on a year-to-year basis. In fact, some of these projects tend to be quite lumpy. So some years we get more in production, some years we get more in digital. But what is more important is the fact that these are still the growth areas for Singapore, and that we've been able to create these jobs for a wide range of Singaporeans with different skills.
We saw the pace of digitalization accelerate last year. The average person will probably relate most to relying on tech as we work from home. But what did you observe on the macro level? And did it change where EDB focused its efforts? Did the pandemic also uncover new areas for opportunities?
Yeah, in fact, indeed, last year I spent a lot of time in front of a computer screen, whether it's through Zoom and so on. So I personally feel that. But more seriously, on the macro level, I don't think our strategy has changed so much. We made this big push into innovation a few years ago. So we are still continuing to encourage companies to explore innovation. In fact, last year we started working with a lot more companies on their corporate venturing efforts as well. And then when you start looking into the industries, we take a long-term view to our industry and ecosystem development efforts. So we pay attention to these trends. Some of the things that we've seen, for example, the digitalization of industries or the growth of tech companies. Now, these are topics that the EDB, because of our industry development efforts, we have started working on from a few years ago. And we've seen how we were able to, I suppose, reap the benefits of these companies growing in Singapore as well. So very much, I think those strategies wouldn't have changed so much. Now, having said that, there were a couple of opportunities that arose out of the pandemic. One good example is in vaccine manufacturing. So last year, we heard the announcement from Thermo Fisher, for example. They are going to be investing into a fill and finish facility in Singapore, and they will be producing vaccines from Singapore. There are also some areas that are, in fact, not related to the pandemic, agri-food and mobility. So Eat Just will be making their protein isolates in Singapore. So this is this whole trend around consumer interest in alternative proteins that we are catching on. And in the space of mobility, because of the electrification of vehicles and sustainability, we work with Hyundai to put their innovation center in Singapore, looking into electric vehicles.
Right. Kong Hwee, I want to talk more about at the company level. How has the pandemic affected how the rest of the world sees Singapore? And in turn, how has the pandemic changed the company's plans in investing here as other countries are also vying for investments to revive their economies?
Companies look at us as having very strong fundamentals. So that part, I think, continues to be quite true for us. In fact, because of how Singapore has responded to COVID-19, because of how EDB has worked very closely with many of those long-standing partners that I talked about, I think it has put us in a good position. During the pandemic, we kept our trade links open. We made sure that our factories were able to continue to operate. In fact, we were also troubleshooting with them all kinds of issues that were related to the pandemic on the ground. So I think this is an area that we had done well. And if anything, I think it has grown the trust between the companies and ourselves.
Right. Just to round up our discussion today, Kong Hwee, what is EDB's outlook for 2021? What are the main growth areas? 2021,
the first half of 2021 does look a little bit challenging. I talk to many companies day in, day out. They are a little bit cautious at this point of time. And that's very understandable because a large part of the world has gone back into lockdown, as we hear from the news every day. So companies are cautious about the first half of 2021. They are a little bit more optimistic for the second half. And this is simply because there is a vaccine that's being rolled out across the world. People are hopeful that the vaccine will help start the journey back towards some normalcy. So this is, I think, the outlook that we're looking at in 2021. Now, at the EDB, I think what we want to do really is to pay a lot of close attention to our partners, listen to the difficulties that they're going through, as well as their future plans. Because of the pandemic, many companies are telling us they have to look at what changes they need to make to their businesses going forward. So we want to pay close attention to that. As a country, we need to, in fact, focus on remaining quite open and welcoming to foreign investments. There is, after all, very strong competition for these investments, and it's not a given that companies will always choose Singapore. So we have to remain open and welcoming. Last but not least, I think this is why we also focus so much on partnering with companies, on training workers, and getting them, giving them relevant skills so that they can fill the job opportunities that we have created for them.